You know, at the absolute center of this entire AI revolution, there is one company that has become the engine for, well, for pretty much everything. That company is Taiwan's Semiconductor Manufacturing, or TSM as we all know it. And today, we're going to dig into an equity research report that asks a huge question. Is TSM right now the most important company in the world?
To really get a grip on TSM's power, you just have to look at this one number, 66%. That's the slice of the entire advanced chip manufacturing pie that TSM is projected to control by the end of 2025. This isn't just being a market leader. This is basically a monopoly on the silicon brains that are going to power our future.
And this chart? Wow, it just puts that number into perspective. You've got TSM way out in front at 66%. Then you have to look way, way down to find its closest competitors, Samsung and Intel, who are just kind of hanging on with about 10 and 7%. I mean, it's not even a competition. But here's where it gets weird. With that kind of dominance, you would think the stock would be blasting off to the moon. But something else is happening.
And that, right there, is the big mystery we're trying to solve today. Despite this iron grip on the market, despite incredible financials, TSM's stock is actually flashing warning signs. It's in what traders call a technical downtrend. The market is scared of something. So what is going on? Let's unpack both sides of this, starting with all the good stuff, the bull case.
Okay, so first, let's look at all the reasons TSM seems like this completely unstoppable force. We're talking about its technology, its finances, basically why it's the undisputed king of this whole AI supercycle.
So where does TSM get its edge? Well, the physics behind it all is just fascinating. They are making this massive technological leap to something called nanosheet transistors for their next generation chips. Now, the key thing to know here is that this boosts energy efficiency by up to 30%. And for AI data centers that are literally sucking down the same amount of power as a small city, that is a total game changer. TSM isn't just selling speed anymore, they're selling a solution to the AI energy crisis. That is one heck of a competitive moat. But you know, it's not just about making the chips. It's about how you put all the pieces together. And that brings us to CoWOS. This is TSMC's advanced packaging tech, and it has become the single biggest bottleneck in the entire AI supply chain. Think of it like this. You're building a tiny 3D city. The main GPU is like the city center. Then you build these skyscrapers of high bandwidth memory right next to it, and you connect everything with superhighways. Right now, TSMC is basically the only company that can build this little city at scale.
And when you're the only city planner in town, guess what? You decide who gets all the prime real estate. Just look at these projections for 2026. NVIDIA has already called dibs on over half of TSM's entire capacity. Then you've got Broadcom, who serves guys like Google and Meta. They've locked up another 15%. AMD's got over 10%. So TSM isn't just making chips. It's literally controlling who gets the AI compute power across the entire globe. And when you control that kind of critical supply, it turns into an absolute money-printing machine. Just look at this number, 59.5%. That was TSM's gross margin in the third quarter of 2025. Think about that. To be that profitable while you're ramping up some of the most complex technology ever created by humans, it's just unheard of. It shows you they have total pricing power. All right, so you've got a monopoly, you've got this incredible tech, and you've got insane profit margins. This stock must be ridiculously expensive, right? Nope. It's actually cheap. Its PEG ratio, which is just a quick way to see if a stock's price is fair compared to its growth, is just 0.51. For context, anything under 1 is usually considered a potential bargain. And on top of that, its forward PE ratio is only 22, way cheaper than the industry average of 36. So basically, the market is treating TSM like some boring old hardware company, not the AI monopoly it actually is. Which, of course, brings us to the bear case.
Okay, so we've seen the fortress. Now let's talk about the storm clouds that are gathering right outside its walls. Let's dig into the fears that are really holding this stock back.
There are really three big fears floating around the market right now. First, you've got the whole AI bubble narrative. Investors are getting nervous that companies are spending billions and billions on AI hardware, but the software that's supposed to make all the money just isn't catching up fast enough. Second, interest rates. The feeling is they're going to stay higher for longer, which just makes all these massive new projects more expensive. And finally, you've got a slowdown in older sectors like cars and manufacturing, which just kind of puts a drag on the whole economy. And then you have the elephant in the room, the geopolitics. It's like a high-stakes chess match.
On one side, you have the US, which keeps tightening the screws on export controls to stop China from getting the most powerful AI chips. And on the other side, China is sitting on a huge supply of the raw materials needed to make those chips, and they're threatening to cut off the supply. And TSM, being in Taiwan, is stuck right in the middle of this massive tug of war for tech supremacy. And all of that fear, all that uncertainty, you can see it right here in the stock chart. This table breaks down what the price is actually doing. The stock has tried to break past this ceiling, what traders call resistance, around $310, and it's failed. It's now trading below all its key trend lines or moving averages. That is a classic sign of weakness. And the next major floor, a price where buyers usually show up, isn't until you get down to around $250. The chart itself is telling a bearish story, which is just a wild contrast to how strong the company's business is.
So what do you do with all this? On one hand, you have a company that on paper looks like the best in the world. But on the other, you have a market that is pricing in some serious risk. Let's see how the report puts all this together to come up with a final call. The report really frames its long-term view with this powerful idea. It argues that what's happening with AI, it's not some temporary bubble, it's a full-blown industrial revolution. Just like when the steam engine was invented. And in this new revolution, TSM is the only company that can build the engines. So it really all comes down to these two completely different stories. You have the bull story, a tech monopoly that's printing money and is somehow still on sale. And then you have the bear story, a potential AI bubble, scary geopolitics, and a stock chart that's flashing red. The real question is, which story do you believe is going to win out? So what's the final verdict from the report? It's clear. Buy. The conclusion is that the long-term story is just too powerful to ignore and that this current weakness is an opportunity. But, and this is a big but, it warns against just jumping in with both feet. The recommendation is to use a very disciplined, tiered strategy to build a position over time.
And this slide lays out exactly what that strategy looks like. The report actually maps out specific price zones to buy in at, tied to those chart levels we just looked at. First, you start with a small position, right around where the stock is now. Then, if it pulls back to that big support level around $250, that's where you build your core position. And finally, if there's some kind of extreme market panic that pushes the stock all the way down to the 220s, the report sees that as the time to get aggressive.
So as we wrap this up, we're left with this one final massive question. TSM is a technological marvel. It's an economic fortress, and it is the engine of our digital world. But is our entire technological future becoming dangerously reliant on one single company located in one of the most volatile places on the entire planet? That's the billion-dollar question that the market is trying to figure out right now.